real opportunity or not. Okay, so what I'm going to do is I'm going to look at this instrument here and start seeing if this is a real opportunity. So I'm going to go down and choose what time frame I want to pick. So if my personality is suited for 30 minutes, I'm going to look at the 30 minutes. My personality is suited for 60 minutes, I'm going to look at the 60 minutes. So I'm going to look at a 30-minute chart here for the Euro SEK, and let me pull up. So I'm going to bring in, for now, I'm going to use Thinkorswim from TD Ameritrade, and I'm going to bring this instrument here, which is basically Euro SEK. And this is basically Euro Swedish krona. Okay, so this is a bearish Ichimoku strategy. Okay, now remember, I'm assuming you know your strategies and everything completely. So if you look here, this closed below the cloud, it's formed a pivot, and now it could pull back. It could pull back to here, or it could break out here. Okay, now that's the daily time frame. The time frame I should be looking at is either 30-minute or so. So this here is probably a little more cleaner for you, and you could see that basically this is pulled back to the yellow line here, held it, and now it's looking to kind of come down. This signal right here was generated. If you look at it, the last one was generated about 17 minutes ago. Let me look at currencies only. So I'm waiting for the website to do that. So here, this is basically looking for, now you can sit there and set this up. Now, if you're looking for a multiple time frame setup, you manually have to do that in the email alert section. The RT scanner will automatically look for MTS for you, but over here, you have to manually do that. Okay, so in here, I'm looking here, and what I would do next is I would go to the 10-minute, which is one layer below me, and see if it has the same support. It doesn't. Okay, so what happens in this scenario here is that the 30-minute has the Ichimoku strategy, okay, which is right here. Okay, however, if you look, this resistance here does not match any resistance here on a 10-minute. And if you looked at all the webinars and workshops we've done, I always look for these multiple time frame support resistances. And the reason why is that when you have them, it creates a institutional support resistance. When you don't have them, it basically means it's not an institutional support resistance. It's a support resistance for that one time frame, and at that point, it's a low probability. So in this example here, the resistance for the 10-minute is the red line here, the green line here, or the yellow line up here. And it really doesn't match the 30-minute at all. So right now, I have two types of day traders. One is the 10-minute one, and one is the 30-minute one. The 10 minutes and the 30 minutes cover all the day traders out there for people that trade 1 minute, 5 minutes, 15 minutes, and so forth. And now what happens is that by not having the same resistance for the 10-minute and 30-minute, you have the day traders having a discrepancy. So if the day traders in here in the 10-minute, they could sit there and pull back to here and then sit there and come down. But if price ever pulls back to here, which is the 30-minute support, so resistance here, these 10-minute traders are no longer going to be thinking bearish. They're going to think this thing's consolidating, and at that point, they're not going to support the 30-minute day traders at all. So to me, this is a low probability trade where I would not take this trade at all. Okay, and the sole reason why is this support resistances on these resistances on a 30-minute does not match the 10-minute. Everyone okay with that? Is there any questions in regards to that? So even though the email may tell me it's a 5 time frame, 4 time frame email alert, right? All the emails are doing is telling me where there's an Ichimoku strategy. It's not finding the MTS for me. So I manually have to sit there, go through, look at those emails, and check to see if it is. If it is, it's a very high probability trade, and I'm going to put that on. Okay? Everyone okay with that? The second one that came across was about 2 hours ago, was Hong Kong. Actually, let's do this. Let's look at stocks. Let's flip this, And let me look at a stock from the S&P 500, since we got the Fed announcement coming. So here's a yesterday. Here's an announcement here. There was a Costco. Let's look at Costco. And let me show you the email alert so you guys know that I'm not rigging this at all. So here's the email alert. I searched for S&P 500. This was yesterday at 5 p.m. And you can see there's Costco here on a 4 time frame, buy or sell. Since it's in the bullish side, it's a buy. Okay, so there's Costco right there. So let me come up here and let's go look at Costco and on a 1 minute. So if you look in Costco here in a 1 minute, it's kind of entered the cloud here and then came back out. Everyone see that? Yes? Okay. Now, in here, this has done this. Okay. Now, what we're looking for, remember, I always look for MTFs. So what I'm going to do is I'm going to draw a line here, draw a line here, and draw a line at the yellow line. So these are all my supports on the 1 hour. Now I'm going to go down to the lower time frames, which is the 30 minutes, the next one, and I'm going to see which of those support lines from the 60 minutes match a 30 minute. This one does, this one doesn't. So I'm going to remove that and remove that one. So now I got a 30-minute support, which equals a 1 hour support. Okay, then I'm going to sit there and go another level higher. I'm going to go to a 4 hour. Notice the 4 hour here does not completely match right here. So right below price, the red line is down here, it's there and there. Okay, it matches very close to a support in the past, but not now. So if I take this trade, it's not the highest probability of trade. Reason why is what's happened is the 30 minute, the day traders are thinking the same way as a 1 hour. The 1 hour is the smallest time frame for swing trading. Okay, the 4 hours are the highest. So if you look here in this example here, what's happening is the 4 hour pulls back to the red line. I'm going to get stopped out on my 1 hour trade, which I don't like. Okay, so in this example here, this is a aggressive trade if I take it off the 1 hour. And if you look at the daily time frame here, you could see that the support level here for the daily does not match the 1 hour support here at all. You could see the yellow line here and the red line here, and you could see the supports are different. So if the daily decides it wants to go for a pullback and pull back to that yellow line or red line here, that basically means we will get stopped out of the trade on the 1 hour. Everyone okay with that? Okay. So this, to me, is still not a high probability trade. Okay. Now remember, you may be thinking, well, Vinesh is just knocking down all of these trades in here. Yes, I am. Remember, the whole idea of the tools here is to filter out from thousands of instruments worldwide and find you only the opportunities that could be possible opportunities. Doesn't mean that they're ready to go. You still have to take it to the next step and to sit there and validate them. Okay, and a perfect way to validate these multiple time frame email alerts is just to look for MTFs. If you find them, bingo, they're ready to go. If not, you gotta wait. Okay. Let me get to some questions. Stephen had a question. Does the scanner give you the levels? Stephen, give me 1 second. I'll get to that level in just a moment. Okay. Give me 1 second. Yeah, 30 minutes. What time is it now? Oh, you should be fine. Okay. Stephen, I'll get to that question in a minute. Wayne had a question. Would you do the same analysis on a higher time frame alert and the email since there's not a higher time frame